What's good, man? Welcome to Sativa Sunday, the stock market show that combines fundamental, macro, and technical data into an agile format to help you develop an edge in the marketplace. That's right. I'm your host, Zeta Wealth Strategist, and tonight it's a little bit different because this is a private show. This is just me. I'm recording the episode that I would have done, right? And the reason I didn't go live and publish this was because I felt like this week was going to be a bunch of noise. And I didn't want to add to the noise, but I also felt like I had a great show put together. And so, again, I use this as a form of journaling as like as form as journaling. And so I still wanted to get my weekly thoughts down so that way I can come back and reference it. And I may even publish this. So it's going to be kind of weird if you rewatching this, is basically, you know what I'm saying, going to be had done before time. So, but anyway, that's beyond the point. I just wanted to get that on tape because, like I said, if I do publish this, this is Sunday, it's 8:35. And these are my weekly thoughts as we go into this week. And so before we get into that, of course, I got to give a big shout out to all the people that support me. So first things first, I got to give a big shout out to the runners community, right? So if you don't know, I do have an awesome community. We have 3 core values where we focus on psychology and mindset. So getting your mindset right, as it comes to trading and investing. We are very process and data driven. You see that tonight as I use the agile format and just how to implement that into your trading style, right? Then, of course, the third is emotional control. So, discipline, habits, making sure that you're doing the right things and developing those right habits as you come along your journey, right? And so how we do that is we have a great book club. We have a health as wealth initiative. We do bi-weekly Zooms. We got guest speakers. Actually, I got a guest speaker coming in probably about 2 or 3 weeks that's going to drop some dope game on us, as well as we have a library of over 200 hours of content. And so you get all of that when you join the runners community. So shout out to all my runners, showing love. Also, got to show love to the Patreon family, right? So if you are not a community person and you're really limited on time, this is for you, right? Because what this is, right, is that I just take all my research and stuff and I put it in a nice weekly format for you. You get daily updates, you get trade ideas. And so this is the solution for you. It's just like cheating off my homework. Of course, you got to trust but verify, right? And like I said, you get the weekly updates, you get trade ideas. So shout out to all the Patreon fans. And they just gave us like a little chat function. So now I can do faster communication through the chat. So, definitely really dope value. And then last but not least, I got to give a big shout out to CANNHIBA, right? The premium hip cigar company. If you don't know, they do CBD premium hemp cigars that are good for you. They're more healthier than natural cigars and all of that stuff. So if you and your fellas just chilling on a Sunday, on a golf course or whatever, use code Sativa Sunday, you get 10% off. So shout out to my boy David Boone for setting that up. And shout out to the support from CANNHIBA. So now that we got, all of the pleasantries and all of the people that show me love, right? We got all of that out of the way, man. And so now, let me get my mic right. Here we go, right? Now it is time to get into tonight's episode. So tonight's episode would have been called the Powell Pause, a November to Remember episode 45, right? So welcome to the Powell Pause, November to Remember episode 45. So I got a good one for us tonight. And with that being said, I'm going to pull up my screen and we're going to get this thing crack-a-lacking, man. We'll get this thing cracking. So we're going to jump right into it. So last week, right, the episode was the art of the pivot, right? And I mentioned how I was looking for the 3 drives to a low. I even pointed out that I was looking for us to come down to this pivot, right? And I said, hey, it only would take another 3% for us to come down to this like 4,100 or whatever, right? And however, though, now, if you recall, I said, okay, I'm ready for us to start looking at first to create this bottom, and then when we get into the FOMC, I'm looking for Powell to pause, and then we shall see if, that sparks somewhat of an end of the year rally, or at least somewhat of a relief rally, right? And so that was basically what I had talked about and shared a couple of things. Now, there was also a couple of other big things that we're going to talk about as far as when we recap the week, but that was the main highlight as far as just that, look, overall, we had this down bearing embarrassing golfing week, and we did almost do the 3%. We was down 2.5%. right? And so with that being said, let's kind of just get into a little, first of all, let's just talk about how accurate the analysis was, because the scenario, remember how I was saying with the US 500, we had gapped up. So well, I was basically saying, hey, we run up to, I said about the 42, 60, I gave it 69 again. I gave it in a little bit higher, but it didn't get that high. We only got to the 42.59. And then I was like, hey, we've been seeing a pattern where the first 2 days is up. And then after that, you sell off the rest of the week. And that's exactly what you have. First 2 days up, and then we sold off and we finished, down here in this area that is a highly traded area right here. Like, oh my God, there's so much volume in here. So and you gotta, at least my perspective, you gotta expect some type of reaction up in here. So that's why I think it's, as a bear, you want to be easy up in this area. But we're gonna get to that in a minute. So at the end of the day on Monday, right, we got down, we ran up. So we talked about that. So what else? Earnings, right? So as far as earnings, we had a big week. So Google kind of disappointed, right? And so that was on Wednesday. We had Microsoft do pretty well. And those was, I guess I'll just skip when I get to the calendar, we'll get to the earnings. But after that Thursday, right? So more data we got to talk about is the GDP. So let me go pull up Forex Factory real quick. For the last week. All right, so let me zoom in on this so we can see this a little bit better. All right, so as far as just the calendar goes, a recapping last week, right? So the big things that we want to talk about was just like I had mentioned, like the advanced GDP. So we came in at 4.9, which was pretty on point with the ATL Fed's forecast of about the 5%. Now the biggest thing is that we sold off on this big, on this number, which we expect because the market is going to think, okay, higher for longer. However, I also believe the market is pricing in that this is the peak growth, meaning like from this point forward, we should be looking for GDP numbers to be going down, right? And so if this is the peak growth and this is as best it's going to get, then okay, at this point it's like okay, we should be looking for this number to come down, and this should no longer be a worry. So we'll see how that goes, and we'll go from there, right? Let's see. The other data that came in was, of course, the PCE, right? So the Fed's inflation gauge. This was in line, right? So even PCE was in line, and the consumer sentiment number wasn't that bad. So on Friday, I ain't gonna front. I was thinking that when we got there, I said, okay, we probably are going to come to, I wanted to see us come down and really close the 41.24 gap. So we go look at the charts real quick. We zoom in here, right? This small little volume imbalance right here, right? Which is like 41.24. I did want us to close below here and fill that, right? So that's basically the pivot that we talked about, right? I was like, come down to this pivot. So now that that's closed, saying 3 drives to the low, right? Like I have been mentioning. And now I'm looking for us to kind of, create that bottom imbalance. But again, we're going to get to that a little bit. Also on Friday last week, some news that came out is that we gotta pay attention to this expansion of the things in the Middle East, because some news came out on Friday, and I think this was what also caused a little bit of that extra sell down on Friday, was that not only was Israel moving in on ground forces, but the U.S. bombed some affiliates in Syria, right, that was affiliated with Iran. So oil got to pop, and just things is just heating up over there. And I mentioned that last week. It's just like that escalation could be something. Hopefully it don't do it, but it just seems like it's on that verge, man. It was so that's what it was. So overall, right? Overall, as you can see, we did have a down 2.5% week on the SPX. Let's go through the other indexes. So just to kind of recap the other indexes, where we at? The NASDAQ, or the Qs, right, was down 2.6%. So you can see we did finally break this low. We go look at the Dow. It broke the May 22 low, right? So it was down 2.14%. And then you got, of course, the small caps just looking terrible out here, right? So it broke it's below the lows of the 2022, right? So but it's also backfilling a lot of gaps here, right? And it's backfilling this gap from 2020, and it came pretty close to hitting that. So at the end of the day, very bearish, right? And we've talked and let's go back to the SPX. Man, listen, last week I said, look, we got a breaker, you got these two mitigations. That's bare. You expect like you expecting this to happen. So, you know what I'm saying? That was not a surprise, right? So that, you know, at the end of the week, that's what we had. Now, what that does though is that gets us into this week, right? And we have another heavy week, right? We have another heavy week to discuss. And so as I lay out the board for this week, couple of top items. We got the monthly switchover. We'll get into that. We got the FOMC decision. We got wait till we get into the earnings calendar, and then we got a lot of economic data. Now, before I get into all of that, I was watching the Bloomberg weekend show, and it was something that was said that I didn't know that's going to be big, that can have some big implications this week on the market, and that's the Treasury refunding announcement. Now, if they come out and don't need as much as paper or can come in line, that could be a good thing for the market. But if this announcement and they say they need more paper, that could be bad for the bond market and treasuries, right? And so I just have to drop that right there. Now, the next thing, now what we'll do is I'm gonna go into the calendar, right? So we'll go start with the economic calendar. So for this upcoming week, right? Like when I say it's a heavy week, y'all, it's so much, but then I'm gonna try to simplify it with the technicals and just the indicators, but it's so many market moving catalysts. And ultimately with the VIX above 20, like I said last week, we should expect 40, 50, 60 point days. And that's what we, you know what I'm saying, that's what we can see. And so it's gonna be a lot of movement. But with that being said, coming into this week, right? Monday, not much going on. Tuesday, this is the last trading day of the month, right? So will we see shorts starting to close out, and do we get somewhat of a monthly wick forming, right? So that's one of the big things that I'm kind of playing with, is that, all right, this is the monthly chart, and do we get a wick, right? And then that's what's going to set us up for what I'm about to get into as far as these first 3 days, or basically the end of the week, but the first 3 days of November, which is kind of crazy, right? So that's that. Let me go back to the weekly real quick. Let's go back to the calendar. Where we at? All right. So yeah, so then we come in on Tuesday. That's the last day, right? And then wait till I bring up the earnings calendar too. So that's it's crazy. So we have the consumer confidence, and then we also get the employment cost index, right? Then Wednesday we get private payroll, we get ISM, JOLTS, and later that afternoon, we get the FOMC statement and the FOMC press conference. This Monday, this is going to probably be one of the weirdest trading day. I'll like leave it alone, man. Like, don't even, just stay out of this. And then the next day, Thursday, we get unemployment claims, which is chill. However, this will be the day that Apple reports, right? Just had to throw that in there. And then on Friday is NFP Friday, as well as you get the ISM services. So it's a lot going on this week. And like I said, on top of that, it's the Treasury refunding announcement, right? So, you know what I'm saying? It is going to be a heavy month, right? It's going to be a heavy month. And this weekly candle, it's a monthly switchover. So, you know what I'm saying? It's going to be weird because Wednesday, we're going to have to go, you know, kind of look at this and then how does it finish, right? So, yeah, so on top of that, let me show y'all the calendar, right? Let me add that in. So for as far as the earnings calendar, this is why I said it's gonna be a lot. So we just went through that. So okay, so as we come into, right, so Monday we got SoFi, McDonald's, On Semi, those are pretty good. After the bell, you got Pinterest, Aristanet, I think that's called. They pretty good. You got Public Stores, that's a REIT. On Tuesday, you got Pfizer, you got Cat, you got Amgen. This calendar popping this week. Then on Tuesday, you got AMD, right? So AMD report this week as it close. You got First Solar and the freaking TAN stuff, or the TAN ETF, and like the solar size, they've been getting smoked. So we'll see what happens with, you know what I'm saying, First Solar. Then Wednesday, this is the monthly switchover, right? So this is the first trading day of November. We got in the morning, you got Humana, you got Generac. After the bell, you got PayPal, Roku, Qualcomm, Solar Edge, right? Airbnb, Etsy, Mercado Libre, right? Then Thursday, this is the day after the FOMC. You got Planetary in the morning, you got Shopify, you got Lilly. Lilly been going crazy, right? You got Moderna that been getting crushed. You got Apple, that's after the close. This is probably the most important earnings of all, though. Like, even though you have some all these companies, now none of them no matter when it comes to Apple, because Apple is most likely going to have the biggest effect on the market this week. And so when this move on Thursday and how this trade's coming into Thursday will be very important. And so we'll see what they do. You also got Cloudflare, you got Fortinet, a few cybersecurity companies. We'll hear how they doing. You got Block, DraftKings, Carvana. And then to end it, you got, I ain't really, by Friday, I'm more so focused on NFP Friday. You feel me? But it's so crazy. So just look at that calendar, right? And just for reference, let me see. Did they update this? Let me see. Oh yeah. Yeah. So as far as earnings season go, you know what I'm saying? We had a 79 EPS beat. The revs is at revenue beats at 47. No, that's not that good, man. I ain't even, that's not really good. But at the end of the day, what that's basically been saying is that, earnings season, it's been okay, right? It's been okay. But the guidance is what has been the sticky issue. So, what's going to be more important to see what Apple say, what AMD say. But as you can see, again, a lot of catalysts, right? A lot of things that can get this market going, right? And so that is, yeah, so that's the earnings calendar. Real quick, let me take a break. All right. So with that being said, let's transition into now we're just gonna get into like straight into it, right? Let's look at this straight, let's get into the charts, right? What are our indicators talking about? What is, what's the dollar? What's some of the strength? Let's pull up the assigner board a little bit, right? Let's ride that. We ain't even pulled that up yet. So let me get this together here, pull this up, right? So first things first, right? I showed this in the beginning of the year, but this is, or not the beginning of the year, beginning of the month, but as far as like, hey, this is the range. I just want to acknowledge that look, right? We below the 3%, right? And so, say that this, just know that this is, 5% will be 40.73, and people talking about that target. So, hey, that was logical. And then we mentioned how some of, the upside was going to be kind of capped. So just know that we are now towards the lower range. We're below the lower potential trading range that I have outlined. I have 41.59. We below that right now. So we had the lower end of the potential trading range that I had. So just, keeping that in mind. We already went through, so the FOMC decision, right? Let's talk about that, right? So the Powell pause, right? So that's the title of tonight's episode, is the Powell pause a November to remember. So I went through the economic calendar. I went through the earnings calendar. And so now let's really get into what's going to be the biggest driver this weekend. So I kind of glazed over, but I wanted to save it. So the November FOMC decision, man. And what type of impacts is this going to have? So ultimately, I believe that I think they'll pause, right? Now, it's always going to be about the language, right? And so depending on, do they keep the door open to them possibly raising in November or in December? I believe, again, I do believe they don't want to back themselves into a corner. So they'll somehow they would try to leave some wiggle room to be open to doing a rate hike, even though I think it could be a blind bluff. Meaning that I don't think that they'll have to raise any more this year, but we'll see, right? You know what I mean? It all depends on the data right now. I think the data is saying, hey, y'all have done enough, especially with how the bond market is and with treasuries running up. I think, at the end of the day, they have done enough, and that they can kind of just let some time pass and see what happens. And, again, I guess you can't keep the door, but just you ain't got to raise no more in 23, right? And then the other conversation is rate cuts, right? And if you start doing rate cuts, then that means the economy is actually doing pretty bad, right? And so, again, I'm not even prepared to be talking about rate cuts, so I don't think they are either, but that's going to be like what the median and narrative in them charters will run rate. So, that's going to be big. That is on Wednesday. That's the first day of the trading month. You got monthly inflows. You got a lot that you have to consider with that event. And just know that it's gonna be a lot when it comes to that, man. It's gonna be a lot when it comes to this, and that's one of the biggest. This is one of the biggest items or catalysts I feel that will determine how November trades. I also wanted to say that. So, that's that. Now let's get into these risks a little bit, right? I want to transition to our risk. So this is when we get into the indicators and stuff. So let me pull this up. So the very first thing is, of course, we got to go take a look at the yields, right? And again, that's going to have this. Oh, I'm sorry, wrong. So that's with the FOMC decision this week, again, we're going to see how the yields trade. Now, I'm going to go straight to the 10-year because that's the one that I have been doing the box on, right? So this is, again, I'm going to re-highlight this and just show that this is what I've been, what we've been talking about since I felt like we was kind of peaking, is that this is what we would see. Granted, we have run higher, but in essence, green week, red week, green week, red week. Now, at this point, with the FOMC decision this week, can it break that trend? And if he pauses, do we see it retreat, say, over November, right? And if so, then that would lean to me, okay, we might see a nice rally or relief rally in November, right? So it's ironic that the switchover on this thing is right on the very first. If I go to a monthly, you can see like, okay, this is what it looks like. So the very first day when that decision is, does this pull back aggressively and just keep selling off all in November, right? This is basically what it did here in November, right? But you got to wake up and you come down. So you can see a push up, but essentially, are we going to see it come sell down again? That's the 10-year, right? And we're again looking for a peak in the yields. Is 5% is 5% going to be the interim peak? I don't know. I can't for sure say that they're all the way done, but we could say if it's, I could say maybe this is an interim peak until like 2024 for sure. You know what I'm saying? Maybe, but we're gonna have to see. So as you can see right now, in the futures market, it did gap up. So that's a good thing, right? That is a good thing. Let's see if it can press into, I would love to see it press into the meeting and then sell off. Right, I would love to see it press into the meeting and sell off. So that would mean is we might see pressure on the market, say, or who knows, the market could just go sideways. But for this indicator here, or just for the yields, I want to see it continue to push up and then sell off towards the end of the week. However, if he does raise rates, then this might sell off and then it's blast off time. Because remember, one of the targets that we did have that it could potentially still go to is the 528. Right, you do legit have liquidity up here that it can push to. So, we're gonna see, man. It's gonna listen. That decision is gonna be huge. So that's the yields, right? Along the yields, let's go take a look at the dollar, right? So the dollar still showing, its strength, but this is what it looks like from a monthly, right? So we're having a doji. I told you for a minute that I am kind of looking for somewhat of some consolidation, or until the dollar can really break out, I'm bearish, right? And so it's this fair value, this daily fair value gap all the way from back in like mid-October. It's just been trading and using that as like some sort of equilibrium. You know what I'm saying? It bounced, it came out, came through, came down, and now it's holding it. So ultimately, as far as the dollar goes, it's gonna depend on the FOMC decision again, right? So whatever it does on Monday, Tuesday, maybe it's a setup, and then when the decision come out, it's gonna make a move, and then we need to see what's the preceding move on Thursday and Friday. But ultimately, from a weekly perspective, right, and this is what just helps me keep everything on mind, is I go look at my pivots, and this is looking like, could we be forming somewhat of an M, right? And so I know ultimately that if it breaks below, if we get a close below, that's wrong, my bad. If we get a close below, say 105.82, then I know that maybe we're gonna have some more downside on the dollar, and that will be good for the market for the rally. But if this thing keeps putting pressure up, then I know we tanking, right? So that's the dollar and what it's been doing. And then the last other commodity or issue that we've been watching is, of course, U.S. oil, right? So let's talk about U.S. oil a little bit. So when we go look at U.S. oil, same kind of situation. This fair value gap that was a weekly fair value gap, but also a daily imbalance. It's been holding, like it's been definitely using it as like an accumulation area. So again, we're looking for oil to just kind of keep doing what it's doing, maybe push back up to the 93. It's still, again, the target is 100 by, say, the end of the year into 2024. So right now, is this the viable pullback that we had mentioned, right? You know what I'm saying? Is pulling back, is using this fair value gap to accumulate, and then, eventually we're going to see this thing doing exactly what it's looking like, which is, it's going to turn and then make its move up, right? And so that's oil, right? So 93, now you can see why I say 93. So oil market, as far as the oil market, I think there was some new, okay. On Friday, when there was more drama in the Middle East with the United States bombing those targets, that made oil pop up. So you see how we got the weekly wick, right? We got that weekly wick. Boom, that was on Friday. So now, of course, that's why this is so manipulated, right? So, but at the end of the day, I think it's going to continue to be manipulated. They want to keep it above 80. And ultimately, if we look at it from a monthly, it broke out. It's just a pullback. So we get to say November, December, January, New Year. This thing can keep pushing. So this could just be a sideways consolidation period for a little while before it makes its next move up. But that's oil. That's still one of our big risks, right? So we went through the treasury yields and oil. And so, those are some things that we definitely want to keep an eye on. And again, like I said, FOMC is going to impact probably all three of those. I ain't even gonna lie, probably all three of those. Oh, and then the last thing is we gotta look at the bond stabilization. So let's go take a look at the TLT real quick. I gotta say, I like TLT on a daily, and this is what gives me even more conviction in that I think the yields are kind of at an interim peak, because from a daily perspective, I like this. This is a lot of buying. I turn the volume on, there's a lot of buying. You know what I'm saying? This is a lot of buying down here. If I go to a weekly, you know what I mean? Yes, it's somewhat on, it says on a downtrend, but at it, if you believe that yields are about to peak, and ultimately these oversold conditions you see as a buying opportunity, and you're using this to maybe dollar cost averaging, or you're building some type of position. And I've been talking about this for a while. I still have my longs, and I like what's seeing. So if we get that pause, like I've been talking about, we could see this thing blast off, and this would be, from a weekly perspective, this would be the bottom candle, and then this week, you know what I'm saying, it's a monthly switchover, right? So if I go to a monthly, this is the low, then we get a nice, monthly candle that starts to fill this volume imbalance, maybe even this volume imbalance and that volume imbalance. But if he pauses, look at all those volume imbalances, you know what I'm saying, you got here. From a pivot perspective, these things are pretty low. So RSI is very oversold, so you could definitely get a rally into the end of the year in the bond market. So again, I feel really strongly about the bonds, and this, if we're about to start, about to see yield inversion, that this is probably going to be a very good opportunity to go long bonds and get ready for when they do have to cut rates. Because if it does come out to be that they have to cut rates earlier than they expect and all of that stuff, then just know the market will sniff that out and is going to be ahead of that. And, you don't want to be looking back on like, man, I missed the opportunity. So I got my eye on this very, very heavy. But bond market stabilization, want to see TLT get above 85 this week. Got to close above 85. That's very, very, very vital. If it can't do that, then not looking good. So let's go look in the VIX, right? So let's transition into the VIX real quick. From the VIX perspective, again, it's still above 20. So we clearly are in correction territory, right? It's when you're in a bull market like this and the VIX is above 20, it marks that you are in a correction. So we closed above 21. However, we do have resistance at this 23. But we do know that from a pivot perspective, we can see this thing push up to about 25.63. And when you look at this is definitely that neckline, right, that we talked about here. And when we measure or proof it from the neckline, say down to the bottom, that gets you, and I would extend it just a little bit more, right? It's going to get you to about, the 23 and a half. So it's gotten there and it got rejected. So, and these are my moving averages. Do we see the VIX start to create somewhat of a top here as we go into, these big reports, right? The FOMC, all these earnings, Apple earnings, you got the NFP. No wonder the VIX is at 21, right? We should have heightened volatility with so much going on. So, again, over here, we just try to use the VIX for what it is. So we know that we are in correction territory. We know that people are a little bit fearful, and wait till we get into the sentiment, right? But at the end of the day, we are in correction territory, puts a little bit higher. And, this also somewhat could represent somewhat of a buying opportunity, depending on, how strong this bull market is going to be, and so we'll have to see. So that's the VIX, right? Well, let's go look at momentum. Momentum. Man, look, I said it could get worse, and it's gotten worse. And we're filling in these, these volume imbalances. And I was like, I try not to look at it like that, but hey, it does, it is what it is, right? So it's filling that in. We do have it all the way down to 3, but let's look at it like this. In the S&P 500, there are only 10% of stocks that are above their 50-day moving average, right? We go look at the S&P 500 stocks above the 200-day. That's 24%, right? And this is the volume imbalances that I was talking about, right? As you can see, but again, we're getting to areas where typically, it starts to bottom out. That's going back to that one, right? So this is last time we was down here was in October of 2022. That was where we bottomed last year, right? We back at that point. And we are higher than we were back then. In October 22, we was at 3,500. Now we have 4,100. So is that, take that for what it's worth. Same thing here. The percentage of total stocks right now above the 20-day, it's only 18% of stocks that are above the 20-day moving average right now. So that is very bearish, right? And we do have, some, the structure does not look good. You got some wicks. It can come down into the box. So, and then this is your 50-day, right? Coming in here. This is very, these are times when, represent some very good opportunities, right? Be looking down here. Same thing for that. This is the percentage of stocks over the 200-day, 23% of the total market, 23% of stocks are above the 200-day. So that's not a very healthy market breadth. And so with that being said, I do want to say that we do need a catalyst for this to turn, right? And so it can continue to get worse, but we're looking for some type of catalyst that will help get this turn, right? And while it does look scary, just know that when it is down here, if you just kind of say, okay, well, let me extrapolate this to a few couple months out, man, this thing, could easily be turned and going back up. And of course, we'll be tracking that, week by week, when I do episodes and update, we'll start to see. And if but we get into the new year and this is back at, 47, 46% of stocks are above a 50-day and all of that. Again, that's going to mean that this was the buying opportunity. So kind of a little bit of a contrarian, but being easy because you don't want to get, this is a train and the Bears are definitely in control. So from a momentum perspective, it's still bearish, still in the hole, still looks bad. You know what I mean? And we do need some type of catalyst to turn it. You know what I mean? And that's just keeping it straight up. All right, let's take a look at the sentiment, right? Y'all know I love to take a look at the sentiment. And when it comes to the sentiment, right, first things first is that we finally got to extreme fear. We finally got to extreme fear. We are at extreme fear. We've been saying it, you want to buy the fear. You want to be looking for buying opportunities. So, the market has been fearful. Also know that we're creating somewhat of a divergence here too, right? And that our peak fear was on October 3rd at about 18, but now we're at about 25, but yet the market is lower, right? So October 3rd, we was at 43, we was at 42.30. And now here we are at, 41.37. So basically almost 200 points lower, but yet we got, a little higher low here on the fear and greed index, right? So, there's a little bit, look at price stocks is at its low. The breadth, we just talked about stock market breadth is really, really low. But when we got here, you look for the turn up. And so, yeah, the market is very fearful. People are very fearful. We go look at the sentiment. At the same time, people are also very bearish, right? So we got a 43% on the sentiment survey update. Remember how I was talking about with this bearish close? I was like, yo, this is definitely gonna go to 40. And this is going to come, I wanted to see this come into the 20s and we was going to see what neutral happened. And so clearly some people went from the neutral camp, went to the bearish camp, and some people definitely left the bullish camp and probably went neutral, right? And I also mentioned how I wanted to see at least 2 weeks of this. So I feel as if we can have a choppy week, and that's really what I'm going to be honest with you. I think if all things else equal, I prefer to just have a choppy week, like in with a doji or something where you just get both sides, right? Because I feel like people are either extremely bearish or people are looking for like a big bounce, and it usually don't work that way, right? When we look at the technicals, it's very easy to be bearish. And there's a lot of bearish setups that just look so easy, but it never is that easy, man. It's never that easy. So at the same time, you gotta be careful. So at the end of the day, we have to take the data for what it is. And as I always say, when a number hits 40 or a number hits 20, you gotta be careful on if you in them camps. So as a bear, you need to be careful because now the herd, the majority of people are bearish. 43% of people are bearish, right? And so that's becoming a crowded trade. Bullish, it's the minority, right? So if you like, I'm low key, I'm low key, I'm bullish, right? But I know I need to be patient. But you are the minority right now. You not there's not very many people who are seeing the opportunity the way you are, right? And in neutral, people just like they kind of picking a side. So when we get our update this upcoming Wednesday, I expect for this to kind of stay where it is, like because I don't expect much, I don't expect much to change between Monday and Tuesday. I think people still might be feeling bearish. And so from a sentiment perspective, I would love to see this coming again at another 40. This probably be again in the 20s and this in the 20s. And then later on, I'm gonna start to look for that to turn a little bit because then then it's really at that point of are you over bearish, right? Right. And so, and then, we might start to see a turn, all those other signals will start to turn, and those things will start to piece together. So it'll be hopefully a nice little mix for that end of the year rally. But we shall see. You know what I'm saying? We shall see. And then last but not least, you know what I'm saying? We got to go take a look at the source indicators, right? So the BPSPX. So that's the bullish percentage index. And look, I mentioned we could go sub 25. And look, we had 23. And I mean, I ain't gonna fret. Again, this is just goes to show and backs up the data that ain't very many people bullish, right? And we now have engulfed, we're now below the March of 23. We're kind of retesting those October levels, right? And so, we are at a significant low now. And so, does this keep going lower or do we start to see somewhat of a turn? When I showed it from a daily, it didn't look too good. So, this looks pretty rough. I ain't gonna front. It's very bearish. It is what it is. And then we'll go look at the NASDAQ McCullough summation, same thing. More stocks in the NASDAQ are going down versus going up. And we're at a pretty decent low. This is the October. This is in the March and October 22 low. I usually do show it from a Heikin-Ashi standpoint, so I'll do that as well. And just show you, right? We got the black candle, and I was like, I don't think it's gonna turn that fast. And boom, we got another red one. But look at that, we're now undercutting those October lows. We're right, we are pretty much in the April, May of 22, down here in January 22. So we're at a very point where it's how much, it's basically most stocks in the NASDAQ are going down versus going up, right? And we're over, starting to get oversold. You're at 25. Last time we was down there was back here in 22. And it doesn't stay down there very long. You know what I mean? Like it's going to come up a little bit, go over, and then we're going to look for that to pop. So again, starting to get to very, very oversold conditions right here to me, where it's almost signaling, hey, this is coming towards the end. Start looking for the buy, start looking for the turn. So that's the NASDAQ McCullough summation. And so, yeah, that's how, that's all the indicators and the data that we use to try to give us an edge. So I got to be honest, right? It's very bearish, right? That's the edge. The edge says, hey, be bearish, right? That's what the edge says. And, you don't want to fight the trend, right? You don't want to fight the trend. And so with that being said, let's get into the technicals. Let's wrap this episode up here. And so look, man, there's a couple of things when it comes to this, as far as technicals, I was like, man, let's keep this very simple, right? Number one, let's talk about a trend here, right? If we go to a monthly, from the beginning of this year, you can say we've been in an uptrend and that these past, 3 months past 3 months, August, September, and October have been corrective, right? And that for real, the overall uptrend is still intact unless we break 4,000, right? And really, I wouldn't say, I say 40-50 right here, right? And real, I'm just going, let me stop playing, right? 40-50, 4,000, 40-50, right? And so this is just corrective, right? And at the end of the day, we have hit that, 10%, right? That represents a correction. So that's a monthly trend. We are in a corrective trend and we're at the point where we hit a very low, right? Now, let's go look at it from a weekly. We've been tracking this. So, I've been looking for the 3 drives to a low, right? And so for a 3 drives to a low, we're talking about us basically making our high, making our peak. You have your first low, you get a higher, lower high, you get a lower low, a higher low, and a lower low, right? So, now we're at a position where, okay, it does make sense for us to look for a bounce, right? But also, I can't front. When you look at this, could we also be getting the 3 black crows, right? Because usually when you look at the correction waves, it's been the peak. You get 3 down weeks. You might get a bounce, at least 3. That was 4 down weeks, a bounce. We need to have maybe 1 more down week. And then that would allow us to test this 4098, maybe in 4050. We do have a volume imbalance down here in these 39, right here at 3965, 3980-ish area, right? And if we do a percentage perspective, again, let's not get it twisted. To get down there, that ain't but 4%, 3.7%, almost 4%. The market can do it because 3%, if we just keep doing what we're doing, is going to get you to the 4,000, 39995, right? So, if any true technician would probably look at this and say, hey, look, I'm probably looking, for a weekly continuation, because again, right, weekly is, we just completed a new lower low. Actually, let me finish, right? Then we go to a daily, right? Our daily is even a downtrend, right? A daily is a downtrend. And really, in order for the daily to, for that downtrend to be snapped, you would have to get above, at least this high, right? Thursday's high, which is going to be 4183. And then when you go look at it from a 4-hour perspective, again, even that is on a downtrend. And for us to snap that downtrend, you're talking about, we got to get back to at least 4155, which is that key level, which is that 50% fib, right? And so over, at the end of the day, right, what I'm saying, any move that we look at is most likely going to be, a counter trend rally, because as we went through all those time frames, everything points to down, right? Now, I will say, right, another piece is that I would love to see, or that I'm also looking at, is that we didn't snap this low, right? Now we filled this gap, but there is a lot of liquidity down up in here, but that also exposes that. So not going below here, it makes me wonder, with this weekly down, with this much down pressure, do we start off the week and test that by a little bit and then look to push up? So what that would do is kind of create this type of candle where, you got like that bullish hammer, you have a wick and then the body pushes up, right? By the end of the week. Do we get something like that? Or, do we get another down week? Again, personally, I'm looking for like a doji, because it's so many scenarios where at such a critical point, we have so many catalysts, it's so many probabilities, we're at the most traded zone, that at the end of the day, the best thing to do is say, look, F this. Let me just sit back and chill and see what happens, because ultimately I think emotion is so high that I would love for us to have a doji week, both sides, right? You know what I'm saying? Have a doji week, make people both be patient, and then after, because after this heavy week is when the calendar really starts to lighten up and things start to get really light, and then we can start to proceed with somewhat of a move, right? So it's like, okay, give me a doji, and then that next light week, we gonna look to push up, right? And we, maybe start to have a bullish run in November, because then most of the earnings season is over. All of those crazy catalysts is out of the way. We'll have more clarity from the Fed. We'll know if the dollar is peaking. We'll know if the yields is peaking. We'll see if we got bond stability. I mean, just a lot more clarity will be had after this week, going into that following week. And so this is going to be a crazy week. You know what I'm saying? Like, it's going to be a crazy week. So let me see. What else did I wanted to say? I wanted to make sure I got all of that. Okay, so y'all know how they do. So for the Bulls, right, I think it comes down to they need to defend 4,100 and 4050, right? Do they step in around 4088, maybe 4098? And also, I think they have to recover 4155. I think that's crucial. At the same time, for the Bears, great job of pushing the market down. You got 2 big engulfing candles. Only issue is that I feel like this volume imbalance here is going to be such a magnet. That's what's going to prevent us from going maybe, say, sub 4,000. But at the end of the day, great job pushing the market down. I want to see if they can break the 4098, right? Test that. We talked about maybe even testing this 4050. That might be a little bit aggressive. But however, let me just throw this out there. If Powell don't pause and he raised the rates, we could break this 4050 and come down to, say, 3964, maybe even 3900 really, really fast. Really, really fast, right? That'd be like a 4 or 5% drop. You know what I'm saying? And that's, if he raised those rates, I could see that to me would spell disaster for the market. So let me just throw that probability out there. Now that's like a 5% probability that I have. But just know if he don't pause and they did go raising the rates, because the market is pricing in a 99% chance they don't. And so if he do and he surprised the market, oh man, you're gonna see a sell-off like you ain't never seen before. Right? And so that's like what I was saying as far as just when you go look at a bunch of charts, when you look at this, the downside is so heavy, it seems so obvious. And that when things are so obvious, it's never that easy. And the market loves to do opposite, right? They love to do the opposite. So if you look at the charts, man, everything looks extremely bearish. All of the indicators are bearish. We just got another bearish engulfing weekly. So it's easy to say that everything is going to shit, right? You know what I'm saying? So if you stick with the trend, you want to see price continuation down, right? And if you get that, let's just say you get another 75 to 100 points. That means we're looking at, in the range of 40, 42 down to 40.17, right? And the 40.42 would basically break this low, and the 40.17 would get you up in here, right? And so, you know what I mean? That would be very vicious. That's us blowing through this. That's probably, that's this pivot right here, coming here to this 40.67, which again, I talked about that was a very psychological pivot right there. So, you would definitely expect support to kind of step in there. But, that's what now, right? Because it's that obvious, you got to ask yourself, when is it the right time to like switch sides and look for the counter trade, right? Are people too bearish right now, right? Are people too bearish? That's what you got to ask yourself, right? And so for me, here's what I'm looking at, y'all, and this is where I'm going to end the episode right here, right? This private episode is that, I see the market got another close with a weekly bearish engulfing. We closed at that pivot that I have mentioned. And so, I want to see if we can retest the 4103, right? I do think that because we closed so low, we look at the daily, it'd be good for us to retest this and solidify, kind of clean up or do whatever needs to be done down here, right? Spend a little bit more time, kind of, give people time to average in the positions or whatever. And then, by the end of this week or even over the next 2 to 3 weeks, right? Because like I said, this week could be a doji, I don't care. But within the next, say, 2 to 3 weeks, I definitely want to see us start the rebound and going higher and, maybe getting by mid-November, working our way back up to this 42.65, 42.85 area, because that's going to be a tough area, right? You know what I'm saying? And really, the first level we got to get to is, say, 41.95 and 42.26. So within the next 2 weeks, I'm looking for us to get up to there, right? Rebounding, breaking the 40.98, maybe even rebounding up to the 42.26. And I'm looking for the counter trend rally to start, right? I think things are getting to a point where it's like we hitting some really extreme oversold conditions. And while, yes, I do see that we can have a little bit more downside to clean up, it's just that at the same time, to me, I think that presents a better risk reward for going long versus going short. And so again, yeah, I'm looking for I'm still looking for the counter trend rally. I'm positioning for that. And that's the episode for the week, man. You know what I'm saying? That would have been the episode for the week. That's really everything I think I wanted to touch on. I still wanted to get this recorded and just in case I want to publish this later. And just to show like, hey, look, y'all can see the date, right? This is still, this ain't gonna be like no hindsight recording or anything like that. This is the analysis that I've had on Sunday, and maybe I'll publish this later in the week or something as like a look back, just to show y'all like, look, this is what I thought, and you know what I'm saying. So we'll see what happens. But again, the reason why I didn't go live is because, like I said, I think it's gonna be a bunch of noise. I didn't want to contribute to it, but I did want to get my thoughts, on tape for me to at least be able to review if I want. And so at the end of the day, man, listen, I hope everybody has had a great trading week, right? Trade safe. And I will do a episode this following week after this crazy week. And maybe I'll publish this the day before I do the other episode or whatever. I'll figure something out. But at the end of the day, man, stay blessed. Peace out.